Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or yes there, just to let me know that it is indeed working. Want to welcome everybody here. I'm super excited for this webinar. I've been looking forward to hosting this all week. I've been trading an overnight trading strategy. It's a more of a technical setup, a little different from the COT report, different from the scanner, and it's had some really great results. So I wanted to share with you guys what I've done so far. Really excited to share this with you guys. But yeah, it looks like we're up and running, good to go. Also want to say hello to those of you in the recording watching this. If you're not here live, just want to welcome you here as well. Want to say hello to those of you on YouTube. Want to say hello to you guys um, today. So, well, let's go ahead and get started. Before we get into the overnight trading strategy that I've put together and the presentation that I've prepared, as always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. And actually, by way of that, one of the things we're going to talk about tonight is the use of the lot size and how we make this work, and how you calculate your pips and everything like that. So, really good disclaimer there. But like I said, I'm looking forward to this webinar. So, I want to show you guys what I've been putting together. And I appreciate you guys coming to hang out with me tonight. We do have the COT report webinar right after this. That'll be at the top of the hour. So whenever we end, and then at the top of the next hour, we'll begin the COT report webinar. So, all right, guys. So, like I said, welcome everybody here. I want to show you guys what I've been doing. So, I put together a strategy about a month or two ago. It's very similar to my London breakout strategy. It's nearly the same, but I wanted to show you guys some differences and something I put together. Got some good results I wanted to share with you guys. So I'm trying to think where I want to start. I think I'll start with this. So before I jump into the strategy, I got to explain and preface a couple of things that kind of made me come up with this new technical system that I've been trading. So one of the challenges we have with any style of trading, no matter what it is that the market is just in Forex, especially, is generally manipulated, right? So if you choose to go long, you can no longer go short because you went long. If you go short, you can't go long, right? And so when you choose to go a specific direction in the market, you forfeit your opportunity to do another thing. This is opportunity cost, right? Like if you decide to go buy a vehicle, you go buy a car, you buy that car instead of something else, right? Like this happened to me like 6 months ago. I bought myself a truck and I really love the truck, still love the truck today. But then when you see other trucks later, it's like, well, too bad. I just married this truck, so I'm not getting a new one, right? Um, which I don't really have any remorse with it because I really like the one I got. But that's the kind of thing. You go buy a house or you go rent a house and you find a new place to live. Once you kind of settle in, that's the place you're living for a while, right? So, and you're not really going to go, you're not going to move next door necessarily, right? That's typically not going to happen once you kind of settle into a place, right? So that's kind of the concept, and I'm just trying to preface where I'm going with this strategy. So, very important to understand that, and it makes sense, right? So in trading, like if you decide to put your stop loss at a certain location, that's where it's going to go. If you decide to enter via a buy stop or sell stop or a buy limit or sell limit, that's where your entry is going to go. You forfeit the opportunity to use something else, right? So the reason why this is a big deal is because the market is largely random in how it performs. Sometimes you'll get persistent type of markets where you have more of a breakout like market on a daily basis for multiple days in a row. Some days you'll get more of a whipsaw market where the market will start to build a rally and then it pulls back all of a sudden. You can this week's kind of like that actually. We've actually had several, I don't know if you guys have noticed, but a lot of currency pairs this week started to go one direction really quickly, and then a day later they start to pull back the other way, right? So it's kind of this week's been kind of like a consolidation or whipsaw type of market, just generally throughout the 28 different major currency pairs, right? Other weeks, like last week and 2 or 3 weeks ago, we had more of a breakout market. So you'd go to bed one night and the next night you wake up and you had big, massive breakouts that were pretty clean, right? So the market's pretty random and it's hard to know uh, what days you're going to get certain results. So I remember my mentor told me, I guess this was wow, this was like 8, 9 years ago. My mentor, he said, because I was trying out different strategies and different techniques, and he came up to me because I told him, I said, I think this martingale stuff is total garbage. I don't think you can make money with the martingale technique. And for those of you that don't know what martingale is, but basically martingale is a technique where you like double down on a on a trade. So if a trade doesn't go your direction, you double down on it. Um, and yeah, it's generally not a good idea depending on how you use it. Most cases, it's not gonna work in your favor. Um, Especially if you're manually doing it. There's a lot of robots and algorithmic trading that adopts the martingale technique because the idea with it is if you're pretty confident with your analysis and the market goes against you, you can just add to the position until the market comes back in your favor and then you make your money. The only downside of that is if it does not come back in your favor and you've been doubling down this entire time, you could blow up an account that way. So that's the danger of martingale. But I remember him telling me like that martingale, if controlled, is actually one of the most powerful things you can use in trading. And I was like, what does he mean by that? Like, I had to kind of discover what he meant. And he showed me a couple of things that he was doing, and I kind of learned um, how to use it. So if you tame it correctly, it's actually one of the most powerful things you can use. So a lot of, like I said, a lot of people don't really want to touch it because it is this kind of a scary thing. And you don't have to use martingale to be a successful trader. Like I'll put that out there that you don't have to use it. But if it's used correctly, in my opinion, and from what my results, it can be one of the most powerful things you do. I most of the robots I use, the algorithmic trading, I would say 90 to 95% of all algorithms out there use some form of martingale. And again, if it's controlled, it's okay. And if it's not controlled, you'll find out pretty quick if an algorithm can't handle the martingale that it's using. So that's actually the worst loss I ever took. So it's funny, the most money I've ever made was through martingale, and the most money I've ever lost was also through martingale. This was like 7 years ago. The worst, it's funny because I've had bigger trading losses since this time, but about like 7 or 8 years ago, I had my worst trading loss ever. And it wasn't at the time, it was the biggest dollar amount. I've had bigger trading losses since, but this was the most devastating loss I ever had. And the most devastating loss I had was basically, here, I'll kind of draw it out on the chart here. Basically, I was trading on like a 1 minute or a 5 minute chart. I was at the end of a trading day and the market was going up on the pound dollar. I think it was the pound dollar. It's just GU, and the market started going up, so I sold. I thought, I was having a pretty good trading week up to that point. It was the end of the day, and I thought, you know what, I might be able to get some more money out of the market. So I kept selling. I added more sells and more sells as it just kept going up, and it just persisted up. Every green candle would be succeeded by another green candle, and then another green candle would show up, and I'd sell again and again and again, and I've maxed out my leverage in about 20 minutes. And then I eventually just blew the account. Just like that. I had a really great trading week and then my account blew up just like that. So kind of crazy, right? I remember actually that day, it was so devastating because I was actually a college student at the time and I didn't have a ton of money. So that was kind of like the account I had. And so I remember hopping in the shower because I hadn't. Oh, that's actually another issue. I wasn't in my routine. Like I was out of routine. It was Friday. I had work off that day, I think, or something. And so I was just kind of taking it easy, thought I was better than the market, and didn't even make my bed that morning. And so I was already off to a bad start. But I thought I was better than that, so I went and traded anyways. And that's how I had my worst trading loss. So if you're not disciplined, like this is a surefire, fast way to lose money as the martingale technique. However, if you're very disciplined, in my opinion, it's one of the most successful things that you can get into in the world of the markets, because this is how you overcome randomness. So remember, I prefaced earlier about how the markets are very random. There's a lot of manipulation. So you can overcome manipulation through your discipline in your risk management. So how you choose to handle a losing trade, what your response is on the next trade, uh, when you have a winning trade, what's your response to that winning trade, and what's your sequence of trades? Like how do you do this, right? So sometimes, like with these martingale's techniques, I'll have times where I might just be losing money, or I might be even like breaking even for a week, and then there'll be like 2 days or 3 days where just everything comes together. This happens. Same thing happens with my other algorithmic and bot trading that I do. For anybody that's ever used bots, you probably know it's kind of the same story. When you trade with a robot, it's kind of the same thing. If it's a good bot, it'll try to keep level, maybe take a little bit of a drawdown. It's okay so long as it's controlled. And then, the markets have the right move that just comes in your direction, and everything just comes together all at once, right? So what the strategy I'm going to share with you guys tonight is a very similar concept, right? So you're trying to keep losses down. You are going to have a series of losses. I'm going to show you something tonight where it's not something that wins most of the time. In fact, it loses most of the time. The win rate on this is less than 50%. I think it might even be less than 40%. I need to double check. But yeah, what I'm going to show you tonight doesn't win most of the time. Most of the time it actually loses. But when it wins, it overcomes that randomness of the market, and defeats the manipulation and all that kind of stuff. So that's what I want to show you. So I hope the 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 foundation that I've just put out makes some sense, and I want you to remember what I've said as I go into this.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders, and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call, in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs, and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week, and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
So let me show you guys what I've done here. So the London breakout. Does anybody know what the London breakout is? Maybe you've heard of it, maybe you haven't. So I'll get to your questions here in just a moment. And yes, if you guys have questions, feel free to get those in the chat box as we go along. My guess is a lot of your questions will be answered later in the webinar. But basically, in the Forex market, there's four different sessions, right? So that's open 24 hours a day. And you have the London session, you have the New York session, Sydney session, and Tokyo session. And currencies and currency pairs that are associated with those sessions tend to have more volatility during those periods of time. So, for example, during the London session, it would make sense for the pound, the British pound, to be moving pretty quickly. If you're trading in the Sydney session, the Australian dollar would make sense for it to have a lot of movement, right? If you're trading in Tokyo, the Japanese yen, and so on, right? So that all makes sense, right? Now, the king session of all sessions is what? You guys tell me. I'm gonna have you guys participate here in the chat box. Who can tell me what's out of those four sessions I mentioned? Which one has the most um, transactions that flow through the market during this particular session? Anybody want to let us know in the chat box what you guys think? Okay, so we've got some answers. Oh, we got a lot of mix here. This is good. Perfect. I love that. So Mohammed says New York. Roger says Tokyo. Gus says New York. Paul says London. Yeah, so it's actually London. So London is the correct answer. Now, the overlap of New York is part of that. So if you said New York, you're not totally wrong. But it's actually the London session is where most of the transactions take place. And specifically, this is why I'll try to include the other folks, but the overlap of New York and London is where most of the action in the forex market takes place. So specifically, 73% of all foreign exchange transactions happen during the London session. Okay, that's a lot. So nearly three quarters of every trade that's ever taken happens during London. Okay. So that's why there's this thing called the London breakout, because when London's not open, the market's usually consolidating. It's moving sideways. It's not doing much, right? Especially if you're looking at currency pairs that are off market. So things like the euro, the British pound, the US dollar, the Canadian dollar, those are not in session when Tokyo and Sydney are doing their thing in the evenings, which we're in right now. So this call, as of this call, Sydney opened about 1 or 2 hours ago. Tokyo opened about 16 minutes ago, right? So we're right in the middle of the Sydney Tokyo overlap, and those markets just recently opened. London's been closed for like 8 hours. New York's been closed for about 3 or 4 hours now. Okay, so naturally, the euro, British pound, and so on, those pairs are going to be kind of quiet, but they're going to open again. When does London open? So right now, we're just past 8 p.m. or 8:16 Eastern right now, and uh, the London market's going to open at 3 a.m. Eastern. So we're looking at like 6 or 7 hours. London's going to open, and it's going to cause a breakout. So why is there going to be a breakout during London? Because that session is going to be open, and naturally that 73% of all transactions are going to start to come into play. Okay. They're going to begin, all their momentum. So, okay. So with that in mind, I've got this cool indicator on my trading view chart right here. This is called the sessions indicator. You can get this on trading view. You just click on indicators. And if you just search sessions, it's going to pull up. Well, I think if you just search sessions, there's several different. Um, yeah, I think the one I use is called. I think it's called Sessions on Chart by Aurochs. This one right here, it's got 72 or 7,300 users. I think that's the one. But a lot of these other ones still work great. But that's the one I've been using, is just called Sessions. And when you click on the settings of this, once you pull it onto your chart, um, you can highlight different sessions. So right now I have Sydney open. If I turn Sydney off, now I've got nothing. If I just want to look at London, London I'll highlight here in this very, very almost indistinguishable green. It's right there. It's hard to see. I guess I could change the color of it if I wanted to. And then if I wanted to put on New York, I could do that. And there's that red right here. So you can see this is New York. So anything in red would be the New York session. So if I expand this out, you can see all the different New Yorks. Those are all the different New York sessions right there. So this is like 20 days of price action that you're looking at here on the euro dollar. Okay. And then if I change this to Tokyo, which we're in right now, you should see Tokyo. Um, you can barely see it. It's yellow. Man, it's not really good looking on this white. Maybe I'll change my chart to a black. Here, let me change this to black real quick. My background. Let's do a black background. Maybe we'll see this better. There we go. Okay, so now you can see it better. So yeah, the yellow right here. This is what did I say that session is? Um, oh yeah, Tokyo. And then if I again New York, there that's easy to see. Okay. And so if I turn on London real quick, if I just do that, you'll see that a lot of the price action, a lot of the movements happen during London here. Okay, so yep, a lot of movement there. Not as much right here, but there certainly was a lot of price action back and forth during that period. Same thing right here. A lot of price action movement happening right here. And you'll notice right before it, not as much, right? Right through here. And then right after this, not a lot of price action, right? And then, yeah, same thing right here during London, lots of price action movement on the euro dollar. Just before that, not as much. Here's London, quite a bit of movement. Right before it, not so much, and so on. Okay, so that's the concept. So the London breakout idea is basically, and I'm going to actually go back to my white background. I wish I could do a poll. I think I can, but I don't know what you guys prefer, white or black background, or maybe it doesn't matter. I usually do white. I used to do black for years, and then I decided to go back to the white background. Um, okay, so let me show you what we're doing. So the strategy works like this, guys. So thanks for being patient. I just wanted to set up this stuff. So here's what I've been doing. I've been doing this for about a month and a half now with really good results, but let me teach you all the rules. So what I'm going to do is I'm going to put sessions on chart and I'm going to change this to um, just the Sydney session. Okay, so why Sydney? So I'm going to change this to Sydney here. And actually, you know what? Maybe it is better with the dark background because I just realized that's going to be almost impossible for you guys to see. So we're going to go dark. There we go. So why Sydney session? So the reason why is because this is the session where the market, the euro dollar specifically, which is the pair I've been trading, experiences the lowest amount of volatility. Okay. So like if there's any movement at all, it's pretty rare. But if there is, it's kind of like I said, an anomaly. You'll see that mostly during this period of time, the movement is pretty light. There was a pretty big move right here. I think that's the biggest day in the last like 30 days, that move right there. But before that, you can see practically no movement here, practically no movement here, practically none here, and so on. Okay. So very light session during Sydney. The euro practically doesn't move, as you can see. What I've been doing is I've been putting a box around Sydney. So what I'll do is I'll come in at night before I go to bed during the Sydney session, about maybe like an hour before Sydney closes or a couple of hours before. So this is very convenient for somebody who lives in the United States. Um, because you can just come in at night. Now, if you're somebody who lives like, let's say you live in Australia, because I know some of you are from Australia or New Zealand, you'll just have to do this in your morning. Like one of the first things you do when you get up, you're just going to have to do this that way. And then for us here in the United States, you have to do this at night. If you live in London, that's probably the most inconvenient place to trade this because this would be like because I think right now in London, it's like 1 or 2 in the morning right now. So it's probably not a great time um, to do this if you live in London. However, don't go anywhere if you're from London. I'll show you this is not the only way to do this. Like you can still get up before London opens so long as you're an early riser and still take advantage of this. Okay. So what I do is I put a box around the Sydney session. Okay. And I'm actually going to change this up here so that you guys can see this better. Let me go to my settings. Here we go. Perfect. So what I do is I put a box around Sydney, just all the price action on, and this can be, I typically do this on the euro dollar, but you can also do this on like you can do this on the pound dollar would be fine. You could do this on the USD CAD. You could do this on the euro pound. You could do this on the euro franc. I probably wouldn't have you do it on something like the euro yen, pound yen. Probably wouldn't have you do it on like the Australian yen or something like that, even if you like those pairs, just because they're not the pairs that are we want the pairs that are most quiet right now. Okay. They're still moving, but they're really quiet. Okay. And we want to draw a box around all the price action that happens during Sydney. So right now, Sydney is moving. So I wouldn't really set this up now. I'd probably wait several hours for Sydney to get about closed, and then I would set this up. So if you live on the East Coast, that might be kind of late. You can still do it, like, maybe wait till 10, maybe wait till 11 if you're up till 11 some nights, and then do it then. That would be fine. Um, but yeah, you just want to draw a box around this. What I've been doing is I've been putting a line above the top of Sydney and then a line at the bottom of Sydney right there. Okay. And then I just do a breakout order. Okay. So I've been doing this breakout where I put a buy stop um, above the top of Sydney in preparation for a potential break to the upside. And then I do a 1 to 3 RR ratio. And how I do this is I put my stop loss halfway through Sydney right there. So I would do an entry right here at the top, and then I would put my entry right there, and then I'd do a stop loss about halfway through it. And then I would also place a sell. So you're ready to break out. So you're guaranteed to trade. Okay. So if you do this is called a bracket order, by the way. Um, breakout order, bracket order, and then you do a 1 to 3 basically. So you do stop loss halfway through Sydney, however big Sydney's range is, and then you do a 1 to 3 RR. And what's cool about bracket orders is you're guaranteed to trade. Like if you wait, so when you go to bed at night, you know for a fact you will get executed into a trade. All right, which could be very good, could be bad, right? I will actually tell you right now, most of the time it's not going to be good, which is crazy. You might be like, but hang on with me. Like, let me explain. You're going to see the value in this in just a moment. Um, like it definitely works, but you've got to you just hear me out, and then you can decide if you want to do it or not. And then if ultimately, you could also change it to your liking as well. There's a couple of variables you can change, but this is kind of fun because one of the biggest complaints I get with price action trading is I get this a lot. Like people say, "Oh, I didn't get to trade today because um, like, oh, the trade that we posted never triggered," right? This happens a lot with price action trades. And it will always happen so long as you trade price action. You're going to have a lot of trades that just never trigger. And it's just the nature and the baggage that comes with that style of trading. Now, at the same time, if you're somebody who wants more control and more activity, this might be something that makes a lot of sense for somebody who's looking just for something that I can trade every day and I'm guaranteed to be in some kind of trade. So it's just a bracket order. That's what you do, and then you wait for the market to break out. This one actually broke out today, but this one I actually lost on last night. The buy never triggered. I know the market never came high enough to trigger the buy. I did get into the sell, and the sell actually was a good trade. But the problem is it actually whipped back up after it entered, and I did hit my stop. So I did lose on that one last night. But the idea here is that eventually you'll get a night where the market just breaks out cleanly. Like, for example, this night right here, this was Friday. This was Thursday night last week. You had a really nice box right here. This was a great trade I took. Um, really nice little box during this Sydney session, and the market practically didn't move at all. All right. And then this was easy. So you just placed your buy stop above here at the top of Sydney. You put your stop loss halfway through it, approximately. And then you do a 1 to 3 RR ratio, puts you about right there. And then I would also, in hindsight, obviously, because the buy obviously triggered, but you'd still be placing your sell. And then about halfway through that box goes your stop loss. And then you're doing a 1 to 3 on the other side as well. Okay. And and then and then I did a one to then I do a 1 to 3. Okay. And this was a really good one because this one actually broke out. It did not trigger the sell. It just triggered the buy, and then it just went straight to the target. That's a perfect world scenario. And you'll get a perfect world scenario about once or twice a week is kind of the average that I get. If you trade this 5 nights a week, that's what you have. You have Sunday night to put this in, Monday night, Tuesday night, Wednesday, and Thursday night to put this in. Because Friday, you don't set it up because the markets are closed by the time you would set it up. So you're kind of done with your trading at that point in the week. So that's kind of what I've been averaging is like once or twice a week, you'll get that perfect scenario. So the rest of the time, the market's kind of random. Like you'll get some kind of whipsaw order, you'll get some kind of like, and actually the worst. So I just showed you that's a perfect case scenario where the market actually just triggers you in like this one did, and you hit the 1 to 3 RR. That's perfect. So what's the worst case scenario? So the worst case, and this does happen also about once or twice a week. So again, market's random, right? So this is why you need. We're gonna get. I'm jumping ahead a little bit, but this is you can defeat the randomness of the market if you're disciplined with your risk management. Okay, it's pretty cool. And that you guys probably know where I'm going with that, but hang on because we're going to get to, I'm jumping ahead. I've jumped a step or two, but you can defeat that randomness with your discipline. So about once or twice a week, you'll get the worst case scenario. So what's the worst case scenario with this type of a trade? Let me find a pretty bad day. Okay, here's an example of a bad day right here. This was Tuesday, the 21st, going into Wednesday, I believe. Or no, this would have been Monday going into Tuesday a week ago. So with this one, here's your box right here. There's the top of Sydney, and here's the bottom of Sydney, and then you just draw out your box. Okay. Then what you're going to do, like normal, you're going to put your stop, you're going to go ahead and place your buy at the top of Sydney, and then you put your stop loss about halfway through, about a 1 to 3 RR ratio, and then you bring this out. Okay. And then let's go ahead and place the sell, put the sell at the bottom of Sydney, and then you put your stop loss about halfway through, and then you go ahead and put your take profit about 1 to 3. Okay, so you have to place the stop loss first, and then you can place your target. So it's a lot easier to place that stop loss, and then the target's super easy because once you know what your stop loss is, then you just know that 3 times your stop loss is your target. It's pretty simple, but just that's the order of things. You have to do stop loss first and then target. Okay, so then here's your breakout. Now here's the problem with this one. This one actually broke out both directions. Like it broke out long first after Sydney was over. You went to bed right here, broke out long. You'd actually be making a little bit of money for a time. You got a little more than halfway to your target, and then it started to pull back, and then you would have lost right here. Then later, after you lost the buy, you would have triggered into the sell, and then you would have lost the sell about right here. So you would not be a very happy camper with this particular trade because it would have triggered both directions and you would have subsequently lost both trades. So not fun, definitely not fun when that happens, but that does happen about, I would say, like at minimum, that will happen at least once a week, minimum. I've had it happen 3 times a week, but I'd say your average is about 1.5 to 2 times a week that will happen to you. Okay. So you might be like, well, why would I even trade this if that's going to happen to me? Well, again, because the market's about equally random. Like you're going to have half the nights you're going to have just, like where it just whipsaws both directions and you're going to just lose, right? And then the other half of the nights, you're going to have some kind of favorable solution or some kind of favorable other half of the randomness of the market where it breaks out perfectly. And that's all you need. You really only need like something like that that works. Um, 50% of the time. And then you can defeat that through your risk management and your discipline. So, and I'll show you how to do that here. And you can actually not only defeat it, but use it to your advantage. So, um, okay, I think that's basically the concept. I mean, like right here was a pretty good trade. Yeah, this was a pretty good one right here. So this was on May 15th. You can see with this one, here's your box. Go to bottom to top of Sydney, and then you'd put your sell stop down here, ready to go. At the bottom of Sydney, stop loss about halfway through, and then you would do your buy stop above the top of Sydney, and your stop loss about halfway through that, and then you would target about a 1 to 3, and yeah, that would have worked out. So your sell would have never triggered, right? So we can delete that because that never triggered. By the time you wake up in the morning, and when this big candle came along, you would have won on this trade. So you would have made your 1 to 3. It actually looks like you could have made by the end of the day. You could have, and this is something I'm working on right now, is trying to figure out if it makes sense to do like, why stop at 1 to 3? Why not go 1 to 5? Why not go 1 to 6 or 1 to 7? Like in this case, it looks like you could have gone a whole 1 to 7 and won this trade. So that is definitely something currently I'm trying to back test and figure out if it makes more sense to do like a 1 to 5 or something like that. I have a feeling it will be good back testing, but if you're going to aim for the 1 to 5, 1 to 6, 1 to 7s on those breakouts, then you especially have to be super good on your risk management. And I can help you through that depending on what you choose. But for now, what I've been doing is the 1 to 3. Okay. All right. I'm going to pause here. I have more to say, but I'm going to pause here because I want to get to some of these questions. Okay. And then I'm going to resume. I'm going to show, I have a spreadsheet I've put together of results that I want to show you guys of my actual trading that I've done over the last month. So hang on for that. Let me just answer some of these questions. I'm going to go from most recent to last, and then I'll work my way back down. So Roger says, what time are you taking these trades? So I'm in Mountain Time Zone. I know that's not the most common zone to be in, but I take them usually between 9 and 11 o'clock at night. So yeah, that's just been and it's not necessarily for any particular reason other than it is towards the end of Sydney because Sydney does close around 2 a.m. Eastern. So I'm not going to ask you guys to stay up to the very end of Sydney. Okay. What you do need to wait for is about 75% of Sydney to be complete because by the time 75% of Sydney is over, it's probably developed a range sufficient for you to place that bracket. If you try to set it up at the very beginning of Sydney, you can't place the bracket because there is no range for you to work off of. Okay. So you do need to wait until then. So, for those of you that live on the East Coast, that might be a little more inconvenient, but like if you can wait until 10 o'clock to set this up, or if you're kind of up late anyways, I would suggest maybe 11. If you're up that late, but it's not required. I don't want to wreck your schedule if, like sleep is hugely important. I'm not that old yet, but as I get older, if I mess my sleep up, I'm wrecked for a whole week, right? So don't wreck your schedule just to trade a strategy. Okay, that's something I've learned not to do. Keep that in mind. But that's the timing. So I do it between 9 and 11 Mountain is typically when I go in. But if you wanted to do it at 10 or 11 Eastern, that works great too. You're that old. I love that. See, Rogers also says I like Euro franc or pound franc. Yeah, either one would work just fine because they're both off pairs during Sydney and Tokyo. Roger says also I've had better luck by using the whole range as a stop loss for each trade. Yeah, so you are going to have a better win ratio if you use the whole range for your stop loss. I stopped doing that just because I wanted to improve my RR ratio. So yeah, your win rate's going to go up if you do that. And that's not a bad way, Roger. I'm not saying you can't do that. I've done it too, and it works. But the what's gonna you're gonna what the problem you're gonna run into though is uh you're gonna have fewer lucrative days. So you'll have more wins. Yeah, if you do that. Um, but I'm all about the more lucrative day. So I'm okay having a strategy that loses more often with the randomness of the market. So long as my big day is just so it just fills your pockets. Okay. Like it just needs to be a day like that. Okay. So that's what this strategy does is it gives you basically 1 or 2 days a week where your pockets just get so full. It doesn't matter what happened the other days. That's kind of the game plan. So you're not going to the market to make money every day, even though that's your intention. Our intention is to make money every day, but we recognize the randomness of the market and the fact that it whipsaws some days, half the days, and the other half it breaks out. So we're working with that randomness. Um, and then we just need to fill our pockets when the one market condition comes along that's just perfect for what we're trying to accomplish. And the idea is to apply a bigger contract on that particular day. You don't know what day that's going to be. So we are scaling in. So like I said, it is a type of martingale where I am adding. So like if I have several losing days in a row, you bet your bottom dollar my next day is going to have a little bit of a bigger lot size and a bigger lot size each day until it's a day where it's more of a breakout. And if I get that breakout, I'm good. I'm in the clear. I've made my money. So that's great. That's a great question. Gus says up at 3 a.m. Eastern trade with some UK friends every day. Oh, that's awesome. Well, that should be easy then to do that. Nice. I used to get up and do that because for me it's at 1 a.m. when it opens. And I used to do that when I was in college. I'd get up and I would trade the candle open of London. And it was pretty fun because you could make a couple $100. I mean, as a college student, a couple $100 was like a big, big deal, right? You make a couple $100. And but I drove my wife crazy, so I stopped doing it. So, but that's awesome. And then also like some days obviously you'd lose some money. And so having to set an alarm to get up in the middle of the night just to lose some money it got pretty old pretty fast. I mean, the nights where you won, it was great though. Um, you love it. Perfect. That's good. That's awesome, Mom. And it says, do you go bigger or small lot says to add to the position? Yeah, we're gonna get to that part. And yes, I do add to the position each subsequent day. So I'm going to show you guys that on the spreadsheet here in just a moment. Let's see. What time? So we said that. That works for Yes, RR ratio trumps win rate. Yeah, yeah, 100%. This is back to what you were saying earlier, Roger, about using the full range. And yeah, you're correct. Both you and myself have had better results using the full range as the stop loss, the full Sydney session range. Yeah, you're gonna have better results as far as the win rate goes. But as far as a lucrative opportunity, I feel like in my experience, it seems better, and it seems like yours too. Our ratio almost always is the thing that we need to work on, and not so much our win rate. Okay. All right, so here's what I've been doing, guys. And again, you don't have to do it this way. I'm just going to show you what I have done. So I took this for all of May. I only had, let's see, I had one, two, three. How many trades did I take actually? I took 34 trades in that were executed trades during May. Some days, so you're going to set up two trades every night because it's a bracket, right? And there's going to be many days where one of the trades isn't triggered. Guaranteed though, like every single day I've set this up, there has been at least one trade that triggered though. Okay. So here's what I've done so far. So here's been my results. So I started on May 1st to track this, and this was on a 100K account. And what I did is I started off by risking my starting contract size is 0.25% of the account. Okay, so I just did 0.25% bracket order. So like if the sell stop has a 0.25, then the buy stop also would have a 0.25. Then what I would do is if that day was a winning day. So for example, on May 1st, I got triggered into both trades. You can see that right here. Hopefully you guys can see this. Hopefully it's big enough to see. I got triggered into both trades. The sell lost money. I lost 11 pips. That was half the Sydney session range. And then the buy stop triggered later and it won. It made the 1 to 3 RR ratio. So I ended up losing $250 on the first trade and then $750 on the second trade that triggered overnight. The next day was a mix. Is the exact same thing. It is the same thing that happened basically. The buy triggered, lost, and then the sell triggered and then won. And that covers it. So what I do is if you have a day like this where you win on one and lose on the other, well, you made $500 net profit. So the next day you just stay at the same lot size. You don't need to manipulate the lot size to overcome the randomness of the market because you're profitable. You don't need to do anything if you're making money, right? Don't change it if you're winning. Okay. So we move on to May 2nd. It's a winning day. Even though one of the trades lost, the second trade won and overcame it. Then you get on to May 3rd, and it's another winner. So you stay at the 0.25, and there was no other loss that day. So that means that just the trade just won flat out, outright, no problem. Okay. Then looks like we skip on to May 6th. Both let's see, one trade triggered. The other one did not. So I got triggered into a buy. That trade did in fact lose. It was at a 0.25 risk, so I lost. Oh, but this one didn't quite. It was so that by the way, this is another rule, not too important, but something to write down. If you have trades at the end of the day that have not closed, close them for whatever they're worth when Sydney opens. So hold them if they haven't hit their stop loss or take profit by the end of the day, definitely close them by the end of the day when Sydney opens. You could also do it around rollover. So if you want to do it just before rollover, you could do it then. Rollover is at 5 p.m. Eastern, so you could just close it at rollover. Okay. Okay, so since this is a loser, this is the first trade in the sequence that's lost money. And so uh the next night we come along and we do this again. So this is now we're starting to hit a randomness of the market where we're not getting exactly what we want, right? So we get on May 7th, there was actually two trades that triggered, a buy and a sell. So we triggered both directions and they both ended up losing. Okay. And I ended up losing $1,000 that day between those two trades. So I lost a little bit from the previous day. I lost $139 because I didn't have a trade close at the full stop loss, but I closed it still nonetheless for a loss. And then the next day, I actually doubled my risk. Instead of 0.25, I just did 0.5 and I lost both directions. Okay, that stinks. So that's the biggest loss so far. The next day I do it again and the same thing happens. So I just want to make you guys aware that these things can go on in streaks. Like you can have multiple days where it just doesn't go the right way. Okay. And so May 8th, I lost both directions, and that was at 1% risk on each trade, and lost $1,000 each. Then we get to May 9th, and finally we get a market condition that's exactly the condition that we're looking for. I risked 2% on each trade, and I actually won both directions. So it means it broke out one way, made the 1 to 3, and then it broke out the other direction, and I won the 1 to 3 the other way too. That's pretty rare. Not super rare. It'll happen every once in a while, but I wouldn't expect to win both directions in the same night all too often. But it's happened to me many times. And that night was nice because I risked 2% on each trade. And since they were both at 1 to 3s, that means I made 3% on each trade. That's a 6% night. So you made 6% in one night, and that boom, that puts you right there. So pretty nice. Okay. And then if we continue along, once you get that big win, I just default back down to the um, um, I default back down to the normal lot size. And you don't have to start out at 0.25 if you don't want to. You could start out at something even smaller and be just fine. So 0.25%, um, and then that night lost both directions. That does happen. So lost both directions. The next night lost one direction. Then the next night you lost both directions again, which does happen. So there's your randomness in play. And then on the 15th, May 15th, we finally got a winner where you won um, in the let's see, we bought right here and you made 2%. Well, you risked 2% and you made six grand on this. This is a 100K account. So you made the 1 to 3. And that, if you think about it, it covers all the losses from the. This actually does very well. You don't actually necessarily, because you're going for a 1 to 3, this is actually a lot more lucrative. So if you guys think about it, like when people use the standard like martingale where the house is against you, like if you go, the most standard thing is like a roulette table. What people do at a roulette table is you can't get the 1 to 3 action. You can't get the 1 to 5 action unless you like bet on green, right? Because what you do at the roulette table, you have like three options. You can go black, which you have like a 48% chance of getting. And then you have white, 48% chance. And then you have green, which is like a 4% chance, right? So you really can't increase your odds like you can in trading, where you have more variables involved rather than just like simply taking the trade like you did. Like at a roulette table, you just throw on like, okay, give me black, give me white. And it's just a 1 to 1 type of thing. Well, it's not even 1 to 1, it's against you. It's actually working against you. This is different because when you get your winner here, um, because of the RR ratio, it's not like you're just recovering. It's so incredibly lucrative that like this is just one of many ways you can do this. Okay, like I'm not this has worked very well because if you think about it, on that trade it made $6,000, but before that there were 1, 2, 3 nights of losses before that, and those losses were minus 1,000. You can see that right here, minus another 1,000 right here, minus a 500, and then minus a 250, and then minus a 250. So you still came away with $3,000 profit in that sequence of trades, right? Which is really, really awesome. So the most I've ever had to go, this was the biggest trade I had to take. I had to risk 4% one night. That was a little bit uncomfortable that night where I risked 4%, but I did get it. That was on May 24th because I did have several losing days before that. I had 1, 2, 3 days of losses before that. And then on the fourth day, I got a win and I was able to get a 4%. Well, I risked 4% and then ended up making 12% in one night um, doing that. Okay, so that's the way, that's how I got that one to work. Now, um, if you're thinking, hey, I don't ever want to risk 4%, you don't have to do it that way. Again, you can overcome this by um, either increasing your RR ratio, or you can, um, the other way you can work this is by starting off with a much smaller amount. So in 1 month, my results are this. So I'm actually on a, just real quick, I'm on a 2 day losing streak right now. So you can see right now, I lost last night, lost the night before. Actually, I'm on a 3 day losing streak. I lost last night, night before, and the day before that. So I'm on a 3 day losing streak. Even with the 3 day losing streak that I'm currently on, so I haven't resolved this randomness that I've been talking about here. It made 17,000 or $17,000. Okay. This was just on a 100K account in 1 month doing that. So that's a 17% return in 1 month. And the biggest trade I had to take was a 4% risk to do that. Um, Now get this, it only made 7 pips. So again, this actually kind of goes to show how random the market is. The market is designed to control this randomness. Like it's designed to be that manipulative where it's just like you'll wind up like break even on pips or even losing pips, but you'll still make money because of your risk management. So if you're disciplined with your risk management, you can make this work. I would suggest if you guys want to do this, so real quickly, if you guys do want to use this, definitely try this in a demo before you go live, just to make sure that you have that discipline first. Because I've met a lot of folks who get really excited, including myself. I'll do this, I'll get excited about something, and then you get on a 2 or 3 day losing streak, and you're like, I don't want to keep doing this, right? So if that could be you, if you're known to do that, that's okay, right? That's why I'm here. I'm to help you guys to learn that discipline. Um, like definitely do it in a demo first, because if you lose that discipline midway through, on a live account, this will end up losing you money, not make you money, right? So so definitely do it that way. And then the other thing you got to ask yourself is, where do you put your limits? So you guys all know that I put limits on Martingale. So where are my limits? So for me, this was my max actually. So this 4%, that's the most I was going to risk on any trade is 4%. And in fact, if I had to go beyond that, I probably would have just stayed at 4% until I finally got, the big gain. So I would have just stayed at 4, um, every night until I got my win. So that's the cap I put on it. Now for you, 4% might be too much. Maybe you want to cap at 2% risk per trade. If you want to do that, I would probably suggest starting at like maybe do these trades at point 0.1, just like a point 0.1 of a percent start there. And then if you have to increase that, you also don't need to double. By the way, this can work without doubling. So I just did it double just because it was easy math and it worked really well. Um, but you don't necessarily need to double your lot size each day or your risk management to get this to work. You don't have to do that. Okay. Um, yeah. So I just wanted to show that. Um, yes, this is recorded. So yeah, you guys can come back and watch this later tonight or tomorrow. This will be up in about 45 minutes. You guys can come back and watch. So, yep, Ryan, you can come back. Yeah, it is really cool. It definitely worked. See, Paul says, so this is showing that overall you're up 17K with this technique. Yep. Yep. So I've made 7 pips in the last 30 days, or well, since the beginning of May, and 17 grand on a 100K account. 7 pips. Again, that just kind of shows you how random the market is. It doesn't, um, it's like it's very equally random. It's one of the most random things that I've ever come across, and and you can overcome that through your discipline. Is what I've discovered is a very successful way. And most people don't even need to make a 17% return a month to be happy. Um, I I was very surprised. In fact, I was like, wow, if I made 17% taking these types of risks where I felt comfortable as a trader, Imagine if I were to tone that down to something more like 4 or 5% a month and made it even more safe. There's probably a way you could make this a lot safer without risking as much as I did. So you'll be watching about 100 times. I like that. That's awesome. All right, guys, I got to wrap up. We're going to start Caught Report at the top of the hour. So I'm going to go ahead and wrap up right now. But appreciate each one of you. Thank you for coming. Have a fantastic rest of your evening. And we'll see you guys in the next webinar. Thanks for coming.